YouTube Investor Channel here, walking you through another 10K report. We're just going to dive right into it. First thing I want to show you is how to find these reports. So you've got to, close the marketing materials from Nike. I'm on Nike.com here. You could find this another way, but at the bottom of all these public companies are going to be investors, investor relations, or something like that on the bottom. So you're going to want to go flow into their investor page, and Nike's actually is pretty cool. They put, you can tell this company puts a lot of effort into this stuff, and as they should. They're for reference right now, Nike is a $97 billion company, so they can easily afford to pay someone in the investor relation to put Ronaldo and DeMarcus Cousins on their page here. That looks like Jordan Clarkson right there. So you want to go to either SEC filings. What Nike does, and some companies do this, is you can go right to the annual report. The other thing you can do is go to these SEC filings. And with Nike, I know it's actually kind of difficult a little bit, but typically you'll be able to find these annual filings. Okay, there's usually a tab there, and you're going to look for 10K. Okay, you'll notice when we search through all these filings, there's 8K, which is kind of like, could be a lot of different things. You have 11K, which I don't see a whole lot of, but it looks like annual report of employee stock plans. You've got these four Form 4s, which are statements of like, this is like Mark Parker and employees and insiders and stuff file these forms every time they buy and sell. And then you have, what's really important too, are these quarterly reports. Typically when you're digging through these reports, unless you're doing some really big investigation into a company, you will look at the 8Ks, but particularly you're going to look at these 10Qs a lot. You'll look a little bit at these Form 4s in certain instances, but then you're always going to look for the annual report as well. And so I already have it up here. And here's Nike's 2017 Form 10K, so their annual report for this year. And as we move through, the first page is going to have some SEC mumbo jumbo. They're going to show you the market value of the shares, which at the time of publishing is a little lower than I think their market value now. Nike, as you can see, has gone. It's actually performed relatively well just in the last couple months. As you can see, it's hitting kind of the highs made earlier in this year around the $60 mark. Full disclosure, probably should have said this at the beginning, I do own quite a bit of Nike shares. It's actually one of my largest holdings. I don't really want to get into why or if that's really a good idea for you. Hopefully this video will help you decide on that. And I'm going to try not to let the biases come through. Nike's been a long time holding of mine, but I'm not going to let that stop me from giving you a fair and honest review of their 10K. Table of contents. Some companies allow you to link and click through here. I kind of like that. Nike doesn't do it, at least on this PDF version. And what that allows you to do is click and kind of anchor down and drill down into sections if you know exactly where you're going. Now, if we knew nothing about Nike, we can read about them right here. Chances are most of you watching are at least relatively aware of this company and what they do. Now, this is really helpful when you're looking at like a software provider you've never heard of, or some company. Maybe it's like maybe it's an oil and gas company, but you don't know if they drill for oil, if they refine the oil, if they just transport the oil. Typically you're going to get some information in here. And so Nike's talking about their products, talking about how they own Converse, how they own, I think they own Hurley. Yeah. So they might own, you might actually learn something here. You might not know they own that, like a surfing brand called Hurley. You might not know they own Converse, which I think they've owned for a little while now. But they talk about their, the Jordan brand. They talk obviously about Nike. They talk about their different divisions up here, and running and golf and all those kind of things. Sales and marketing. Nike is a shoe company, but if you listen to their, their investor calls and their investor relation calls, I recall, I haven't listened to that many recently, but I remember Nike would always start a call off basically saying, we're a sales and marketing company. They don't pretend that they're a shoe company. They actually call themselves a sales and marketing company. And we'll actually dig through and look at their sales and marketing expenses and how much they pay for this, and how important of this right here, sales and marketing, is to Nike. Okay, yeah, you've got to have the nice shoes and the cool clothes and the right athletes, but part of the endorsements and the athletes and their commercials. I mean, we can all recall like at least one or two Michael Jordan ads that we remember, a Bo Jackson ad. There was a Charles Barkley ad. Tiger Woods has had some memorable ads. Even athletes that kind of flamed out quickly, like Anthony Hardaway, have like memorable marketing. And if you can remember a commercial a decade ago, 2 decades ago, just shows you why they put this in part one, is that while they make shoes and stuff for athletes, this is a marketing company. It's an important, if you're going to invest in Nike, you understand this right here. Talk about their United States market, which is, I believe, their largest market. They give you the number of stores. So if you're curious they got the factory stores, they've got Converse stores, they've got Hurley stores, not too many of them. But they give you kind of a total number of stores. One thing you could do is, if you wanted to see how this number grew, if they don't tell you in here how this number grows, you could go get 2016 annual report, the 15 annual report, the 14 annual report, and it's going to show you this number and maybe the growth over time. International too. Wow, look at that. Look, international markets and U.S. markets. So Nike is truly a global company when you get this perspective that they have almost 400 more stores, almost double the amount. It's almost a perfect double. The number of stores they have in international markets. And we'll go over their international markets, and they actually outline them here. If you're curious, a company like Nike is truly global. I mean, they're Sri Lanka and Turkey and the UAE. I mean, they're everywhere. Some other companies might not be as global, so maybe being able to see like, oh, look, they're in Chile, they're in China, they haven't gone. You might be able to identify some countries that the company you're looking at hasn't gone into. Might be a way to identify some growth. Significant customer, you'll find this on annual report. Sometimes you got to dig for this, but no customer accounted for 10% or more of our worldwide net revenue. So a company this large, you'd expect this, but I think even like Under Armour, I've looked at their report. I think like Dick's Sporting Goods, it may not be that way right now, but at one time, I think Dick's Sporting Goods was actually over 10% of Under Armour's. Don't quote me on this, but they were a significant customer of theirs. And you'll see this in brands that aren't quite as big as Nike. This is key, because if like Dick's Sporting Goods or Sports Authority went out of business, Sports Authority might have been a huge percentage. It was a decent percentage, I'm sure, of Nike's business, but definitely a brand like Under Armour or anything, a brand Under Armour size or smaller definitely would have feel that more than a Nike who, 2, 3, 4 of their customers could go away. And we're not talking more than, a huge amount. Talk about orders here. Futures orders, which I think is like wholesale, which is like code for wholesale orders. You'd have to dig in this, if you're like futures orders, what the heck's that? Nike probably breaks this down, and what I would recommend is doing like copy this and then do like a find and replace and put like, futures orders up here, and then drill down to each time this report says future orders, and you'll be able to maybe get a clearer understanding of that. But you notice that it was $14.7 billion in 2017 compared to $15 billion. So futures orders actually went down a little bit. Might explain a little bit of the choppiness we've seen in Nike shares. But again, they're approaching they're almost about to break out of the. If they break above the 60 level, I think you could easily see these shares retest this 65 level, and then it'll face serious resistance here. But this level of support, this $50 level, you see how many times this is held for Nike since the end of 2015. This $50 level has really provided a big base of support for almost 2 years. If Nike were to break that level, you'd easily see shares trade down into this $45 range, maybe even as low as $40. But it would really have to deteriorate to get to that point because it's tested, 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 and now we're about to retest those top. Just some minor technical analysis as we're working through our 10K here. Product research, design, and development. So this is showing you some of their, Nike Air, Lunar, Zoom, their Flywire, their Dry Fit, their Flyknit, their ZoomX. I think recently they have those. Gosh, I can't remember the name of the shoes that they have out now. Oh, Vapor Max. So everybody's wearing those. I wanted to get my wife a pair, but she didn't want to spend $200 on a pair of shoes. So I might have to buy myself a pair. But it shows you a little bit. This is just a tiny amount of some of their product development. They're really giving you very brief overviews here. Manufacturing, this is cool. 127 footwear factories. This is like if you want to if you want to start a shoe company and you're like, man, I want to compete against Nike, I want to be, really want to do this. Yeah, you're gonna not. They have like over 1,000 stores where they sell the shoes, so you got to go up against that. They've got 127 footwear factories located in 15 countries. This is why competitor after competitor has, what's his name? Kevin Plank from Under Armour has been on CNBC number of times. Oh, we'll win. We'll be better than Nike. Just go look it on YouTube. Kevin Plank. Oh, we will win. We will win. We're going to get bigger than Nike. Buddy, these guys have 127 footwear factories located in 15 countries. Under Armour might not even be selling in 15 countries, let alone have footwear factories located in that many countries. So it just shows you it's going to be really difficult for anybody to compete with this brand over time, especially if they can continue to grow. And so they go, look, they got 363 apparel factories located in 37 countries. Just shows you the vast domination. And really what this shows me is how difficult it will be to compete against Nike. Yeah, maybe you can chew into some of their market share in certain locations, but overall in the whole globe, man, it'd be really hard. And here it's showing you the breakdown of the person. We make 40%, looks like 46% in Vietnam, 27% in China, 21% in Indonesia. These numbers are could be particularly interesting if you study wage changes, worker changes, any kind of like environment. I know with China, you've got wages are rising, and then you have the environmental pressures that the government, or it's probably not pressure. It's probably like, in China, it's much needed, environmental controls, regulations. So that will affect the profitability you get out of manufacturing in China. But, I don't know about Vietnam. I don't know as much about Indonesia. But those companies make up, looks like 67% of their manufacturing. So Nike not as exposed to China, and that actually might be a good thing considering what's going on in China, especially over the next decade or so. International operations. So they talk all about that. They're going to mention some of their bigger markets, I think, in here, and like China and stuff. Competition. This is like one of my favorite parts on every 10K. Now with Nike, we're all aware of their competition. You got Adidas who's really doing well right now. Asics, Li Ning, that must be in China or something. Lululemon, Puma, Under Armour, VF Corporation, which I think owns. They own some of the surfing brands that Nike's going to like Vans, I think. Don't quote me on that, but I think VF owns a ton of different brands. I think it owns a ton of different brands. So they name their main ones. Now this, again, we know who these companies are because this is a consumer-facing company, and we're aware. If you're aware of Nike, you're probably aware of Under Armour and Lululemon and Adidas. Okay. But if this was like some software company in Silicon Valley and you had no idea who their competitors are, I always look for this. I always look to see, especially when I'm digging into a sector, like take like 3D printing a couple years ago. You may not have known much about 3D printing. So it's like, hey, who else is doing 3D printing? Maybe like right now it's like artificial intelligence and machine learning and stuff like that. So you might want to go to like IBM's 10K or like Google's or Amazon's or something like that, where they talk about their competitors in that space and might give you some insight into that, into their competition and stuff. Trademark and patents, they don't outline them here. I know Nike's been I think Nike was like, I saw something like last year, Nike filed for more patents than like Apple did. So they've been really big in this patent space, getting technology and stuff. I know they got those self-lacing shoes and all this air technology is patented. That's why you don't see other companies have a lot of exposed air technology because, well, Nike owns a patent on it. Employees 74,400. So definitely, I mean, when you got this many, when you're this big of a global brand, that's a lot of employees. Although I was looking at the other day, like Amazon has like 491,000 employees. So just goes to show you, Nike's got a lot of employees, but there's other companies out there with just as many. Probably as a shareholder, you probably want to see this and check because this is money that's got to go out the door. You know what I mean? Obviously, we want to have employees there selling, and they got to work the stores and make the shoes and whatnot. But me as a shareholder, I want to make money too. This is cool. I don't always see this laid out as clearly and certainly as often on a 10K as I see with Nike, but they're obviously very confident and very proud of their team here. So it's led by Mark Parker, who's not that old, but he's been with Nike since '79, so he's probably relatively old, but you love to see this, quite frankly. He's been employed with Nike since 1979. That is that to me is amazing. So you love to see a guy. Well, he's 61. That tells you right there, and it gives you the age. Actually, I should have known this. It gives you the age of all these guys and girls on here. And so typically you like to see the young, a little bit younger means they're going to be there a while. Mark Parker, I can imagine, will be here he could probably last another decade. Who knows how long he'll last? But when you got a guy there since 1979, that's honestly awesome to see. And you can go through all these other names. You might be aware of Mark Parker. You might not be aware of the other people. This gives you kind of a brief overview of their, the kind of their accomplishments, how long they've been there, some other places they might have worked. Risk factors. If you watched my other videos, it's like my favorite and probably one of the main reasons why you might want to open up a 10K. Now, again, with Nike, we're pretty aware they face intense competition from Adidas, Under Armour, Lululemon, etc. But, there's other risk factors in here that might be important. But again, if this is a software company, if this is like an artificial intelligence company, if it's like a machine learning company, and you have no idea about any of their risk factors or it's like an oil and gas company and your only exposure to oil is filling up your car, it might be nice to go through some of these, okay? Nike, I'm not going to go through any of these in particular, but because quite frankly, before I started this video, they're all fairly plain vanilla. I don't want to say plain vanilla, but they're your standard. We might have data breach. We might, our contractors might not comply with code of conduct. We might do something stupid. International operations. There's a lot of different risk factors in here. None are overly surprising for a company this size or one that you'd be likely familiar with. So we'll move on. Properties. So you kind of want to know, a little bit more about. They don't really give you a ton of detail on them here, but they do tell you they got I actually drove by this one time, the 400-acre site in Beaverton, Oregon. I remember my dad drove us by that. That was 20 years ago now. Maybe not quite that long, but if you've seen it on TV or anything like that, if you've been up in the Oregon area, you realize how big of a presence Nike. Also, side note, you want to get some really cool Nike stuff for cheap. The factory stores and the outlet stores for Nike are incredible in Oregon. I remember I've driven up there almost 3 times now, and gosh, I stop like every couple cities to just bump your head into a Nike store up there. You find really cool stuff at a good price, but we'll move on. They got no legal. I bet they have legal proceedings, but nothing material to a $90 billion company. They don't. Mine safety disclosures and SEC thing not applicable here, and you'll find that for the most case, that's what happens. This is purchases of equity securities. So it kind of gives you an idea of the total number of shares purchased, the average price. This might be actually a buy. This could be like a buyback. I know Nike's in the yeah. This is publicly announced buyback program. And showing you really what I like to see is like, hey, what did the company buy the stock at? So Nike was in there buying at 53, 55, and 56. And so typically these companies are better at making shoes and marketing than they are at buying their shares. However, remember we saw this chart. This this mid 50s price is not a terrible place to be buying the shares of Nike. That's really more of an opinion than fact. But, at least Nike wasn't in here buying it at the $60, $65 level, $60 level, which we see as more like resistance on the overhead. Nike performance, you often see this. So you see Nike here. I'm assuming this includes dividends. But it also gives you this S&P 500 Apparel Luxury Good Index. It shows you that here's a list of the companies: VF Corp, Ralph Lauren, Under Armour, Michael Kors, among other companies. So I found that this page often gives you like other ideas to invest in. Like if you're like, I like Nike, but I want to diversify, or maybe I don't like Nike, I want one of its competitors. Typically, these will give you some ideas. Again, with Nike, we're aware of Polo and Michael Kors, but with some of these other companies, you might not be as familiar with the other people. Selected financial data. This is when it gets really fun. These annual reports are awesome because they give you financial history on a year over year over year over year over year basis. So we can kind of see like how Nike's been doing just over the last couple of years. So just 4 years ago, they were at $25 billion. Remember, this is going to be in millions, says it here. So that means you got to add some zeros here. This is $25 billion. And I believe, don't quote me on this, but I think by 2020, Nike has set a goal of, I think it's $50 billion in revenues. I think they might even set that goal back sometime around this time. As we can see here, we're in 2017. Ooh, man, 34 billion. I don't know how close they're going to get. They grew only, and put that in air quotes, to about $2 billion, almost exactly, a little less than $2 billion. They're going to have to grow way more than $2 billion a year over the next 3 years to reach $50 billion, because you can add, $6 billion to this and you're only at 40. So Nike's really going to have to accelerate this revenue line. I'd be impressed if they get to that $50 billion mark. They might have to do some acquisitions to get there. They might have to, totally obliterate. So it'd be nice if Adidas fell off the map. Then I think they'd have a shot, but I don't know if they'll have a shot at that. But anyways, a little side note there. But you can see a company growing here year over year, and obviously with a Nike, with the valuation it has, you like to see that. Gross profit. You like to see this scale up in relation to this growth up here. Okay, like if you open up maybe like Snapchat's 10K, you see something different here. You'd actually see revenues growing slower than the other expenses, and that's a major red flag. And something you should be very concerned about. Younger companies like Snapchat, not quite as alarming. Something like Nike would be highly alarming. If you see this line growing at a certain rate and the lines underneath growing even faster, that would be incredibly alarming, and the stock would be much, much lower than it is today if that was happening. But that's not the case. It gives you it in percentage form. So you see gross margins, they've hovered right here around, we're kind of on a 2-3 year low here in terms of gross margin, but it's not anything, if this is really slipping, if this dips into the 30s, I think I'd definitely be concerned. I don't know if I would sell my shares, but I would bring a little bit of concern. Net income, so almost the bottom line, but it's kind of the bottom line. You can see this has grown as well. So Nike's generating net profit after your kind of gross profit, net profit of this $4 billion. So again, they carry that line down here. They have some discontinued operations. This is like a company that they might have sold or ended. They kind of make note of that here. Now, earnings per share. So they're showing you Nike makes $2.56. That's on a basic base. That's on kind of a standard basis. Fully diluted. This is the number I typically look at. If these numbers are really far apart, now they're apart by 5 cents here, so it's showing me that Nike has kind of a standard, diluted over basic. If these numbers are really far apart, like I've seen companies where it's like $1 apart, or this is negative, and this is. I was looking at companies a while back, but this was negative, this was positive. That should, I don't want to say bring up alarm bells, but definitely bring further investigation. Why is that diluted number so much different than the basic number? And I think you'd always want to take the diluted number as what you take a look at. Weighted number of shares outstanding, you see the diluted weight here. So obviously this number is going to be bigger since this is a lower number. And you're essentially dividing, I think, this net income by this to get this. And so you get an idea, the number of shares have actually gone down. So that's an evidence of a buyback. And so that's how Nike's been able to get the, earnings aren't growing super fast from here to here. But you notice, man, this earnings per share has actually gone up. That's because the earnings per share has gone down. And that is because in Nike's case, they bought back the shares and retired them. This is why sometimes you hear, buybacks are good for shareholders. That's because in some cases, in all cases, it typically gets the earning per share number to go up, which can drive the stock price up, but not in all cases. Now, what's also good in Nike's case is they pay a dividend per share. So you can imagine when you're paying this dividend, it's going to be times the number of shares outstanding. So if Nike has less shares outstanding, they're actually paying, as the dividend, as you can see, has gone up. I actually think this just went up. This will be 80. I believe it went up to 20 cents. That might be rounded, but 20 cents next year. So you've actually gone to 80 cents, and that's actually a double, pretty much a double over a 4 or 5 year time frame. And this is why a lot of people like myself, who's not particularly old, I'm buying Nike because look at the coverage they have on this dividend. They make $2.51 a share, and it's kind of a rough, I don't want to say a rough year, but not a great year, honestly. But look at the coverage. Gosh, they could double this dividend and still have earnings per share that well in excess of that. So that's something you want to, something like GE or like there's other, like if you look at CLCT, I know for a fact right now, their earnings per share is less than their dividend. So what's going to happen? They're going to either have to buy back shares and retire them. They're going to have to really start making a lot more money, or they're going to have to cut the dividend. And typically what companies do is they end up the easiest thing to do, and actually the only effective thing to do is cut the dividend. You see that that's not going to be the case with Nike. In fact, Nike probably has many, 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 many years where they're going to be able to grow this dividend. And so if you're a patient shareholder, that's something very powerful. Price range of the common stock. So you kind of see the high and the low here. So boy, if you're back here buying it in the 20s, you see the stock is pretty much, doubled, tripled in some cases. And, you're paying this much for the dividend here. Now you're paying this much. You can do kind of, yield and percentage calculations off that. Cash and cash equivalents. Notice Nike has kept cash fairly steady, so roughly $3 billion on hand. You have inventories. This is a huge number for a company like Nike. Probably as important for me to watch this inventory number as it is maybe even like earnings per share. You're going to assume Nike is going to pump out some net income off they have $35 billion, $34 billion worth of sales. They're going to pump out some net income unless they're complete idiots over at Nike. Okay. I mean, they're selling pieces of cotton for, they're selling shoes that they make for $10 for $200. So they're going to make some money. Okay. Now, but inventories on hands. One thing we notice, this inventory number is getting bigger. So Nike's actually, the sales, yes, they're creeping up, but so is this inventory number. You'd actually like to see this probably trend down a little bit over the next year or so. Another number that's been creeping up. Look at this long-term debt. We'll get more into this in a minute and whether or not you really should be concerned about this. But you see Nike's essentially almost tripled their debt over the last 4 years. Again, we're looking 2013 to 2017. And 2017 is not January to January, January 1st to December 31st. In Nike's case, their fiscal year falls. I think they end it right before what's considered the fourth quarter. So it's almost like the summertime to the summertime is their fiscal year. You have to really look and see when a fiscal year starts and ends for a company to understand. But this is 12 months, but it includes some of 2016. It's kind of confusing. I don't want to confuse you too much, but just understand we're looking at an annual report for 2017, and it's November 20th, 2017. Just shows you that Nike's fiscal year 2017 ends before 2017 actually ends. So I just wanted to make that point just in case you might have been confused by that. But long-term debt's trickling up. You might want to be mildly concerned, not super concerned, but you notice cash versus debt. They were at like a 3-to-1 basis for almost all the time. And now we're at like almost dollar for dollar in terms of debt to cash. Not something I'd really be concerned about in a $34 billion company, but if these numbers were in thousands and we're at a $34 million in sales, I might be kind of concerned about 10% of that being in debt. But for right now, not too concerned. You can see when this report was concluded. Shares are at $52.99, and you can compare that to other years. Return on equity. So this is kind of like the profitability, I believe, going off my, it's been a while since I sat through a finance class, but I think this is return on equity is return essentially on net income. So kind of the profitability. Return on assets is how well the assets of the business are performing. And the way I think about this, guys, is if I had a business, for every dollar I put in, I got 19% back. How much money would you be putting into that business? Okay. Right now, interest rates at a bank are like 0.025. Okay. You might be able to get interest rate on your house. You take out a home loan. You're going to be paying 3.5, maybe 4% on a home loan. You take out a credit card, you might be paying a little bit closer to these rates. It just shows you, okay, for every dollar you're putting in terms of the assets of the company, it's generating 19%. Okay, that sounds a whole lot better than the 3% you might lend somebody to buy a house. Or on a car, it might be 5%, 6%. I think my car is like 3%. Okay, guys, 19% return on assets, pretty darn good. You can see why investors are buying this stock because this number continues to trend up, which is good. Inventory turns, so showing you how quickly I think they're turning inventory over, and you see it's slowing down a little bit. You like to see this accelerate back into the 4 range, but not too concerned. Now, price to earnings, you see everybody use this as a metric. So almost on every company you look at, pretty much every company is going to look at some point at price to earnings. In this mid-20 range, I'll tell you, this is where fashion brands, Michael Kors, Ralph Lauren, VF Corporation, they're almost, you might say, hey, 21's expensive. That might be compared to a bank right now or some sectors of the economy. 21 times earnings might seem like, oh my God, that's so expensive. You can see over a 4-year time, Nike trades in this mid to low 20s price to earnings. If this were to get lower than 20, I would say that's a very, there's going to be a reason for it, but it definitely would get me interested in buying shares at this low 20 multiple, because if Nike can reaccelerate the earnings, you're going to get into this high 30s, mid to, closer to 30 multiple on kind of a growing fashion brand. Like right now, Under Armour's kind of backwards, and it's the reason why the stock has been trading off all year. In fact, Under Armour's been one of the worst performing stocks of the year. So that's because Under Armour's price to earnings ratio is still like triple this. Okay. And Nike's much slower growing now. It's now growing about the same as Nike, and has far less sales and far less market penetration. So just goes to show you there. Selected quarterly information showing you quarter over quarter, quarter over quarter. You don't always see this in all the 10Ks, but I kind of like how they did this. It shows you how these revenues progressed over the year here. And you see actually Nike's quarters are actually pretty steady, which is kind of remarkable considering a lot of retail and a lot of buying happens in that fourth quarter. But you notice in Nike, the fourth quarter might be the first quarter. What we think of fourth quarter as Christmas buying, I think is that, I don't know this for a fact, and you could find this out if you needed to, but I think it's this first quarter actually. So this is actually Christmas sales right here. And then we go through, kind of January post Christmas, we go summertime right before Christmas. I think that's how it works at Nike. I'm not 100% sure, but I'm pretty sure that's how it works. And it would make sense here. You got all these a bunch of sales at fourth quarter. They kind of die down a little bit at the beginning of the year, and then they start picking back up as we move back into the holiday giving season. But it kind of shows you quarter over quarter, Nike's pretty steady. But what you might find in some companies, maybe like companies with like long sales cycles, maybe it's like really lumpy, or a company that really gets all their sales all in one quarter. You see them all flood in December. It might help you, estimate, hey, Christmas 2018 is coming up. What can I kind of expect from this company, or what can I compare it to from the year before? And it's going through all the data that we've kind of gone through already. More of this in words. So I'm not going to read through this. It's not super entertaining, but again, you can read through a lot of this stuff. They're going to tell you what I've kind of gone through by myself up there. And it's going to walk you through this in terms of, in words. So typically that's how these 10K works. They kind of show you a graph or a chart, and then they walk you through it in like English. And this, I wouldn't say plain English here. Sometimes this is written in really like legalese financial terms. I've noticed with Nike, they've done a nice job here making it more readable, and it might have to do with the kind of product that they sell. But man, sometimes you read these things and it's like you almost need to be a return. Well, a lot of times I have to read the sentence 3, 4, 5, 6 different times because, man, these CFOs and these investor relations people do a really good job, especially when they're trying to hide something. They do a really good job of burying it in here and making it kind of hard to dig out. Results of operations. So we have our revenues, $34 billion this year. And again, they're showing you the percentage of change over a year. And you see Nike's kind of, not growing super fast. Again, if they want to get to 50 billion, they better be growing way more than 6% a year. You notice, hey, the sales went up 6%. Cost of sales went up 9%. So it's not scaling as well as it probably has in the past, as we see the revert. This is really what you want to see. You want to see revenues going up, cost of sales going up about the same or less, preferably less. Here we've got the reverse of that. If this continues, it'd be a problem for Nike. I wouldn't say a big problem, but it will become a problem over the years if that stays the same, that trend continues. So you'd like to see that reverse. Probably a sign of like promotions and like Nike really having to this revenue line really not being as big as as it needs to be. This line's going to be, I don't want to say a fixed cost, but it's going to be harder to move this line than it is this line. And so Nike's probably had to put a lot of stuff on sale. Stuff might have not have sold as well as they thought. So it's putting some pressures here, and we've seen gross profit only growing 2%. Not when you're coming off these big $15 billion numbers, it's still growing to 2% is not bad. Nike, again, is got to be 30 years old or more. So still growing at that rate, not the easiest thing to do when you're as mature. Finally, we get some breakout of some other things. So we get this total selling and administration expense. We see this actually scaled up just nicely. We like to see this, that it is up 6% over 2015, but just over the last year, only up 1%. It's still, a couple $100 million or so, but we're on a $34 billion company, so we expect this to increase as well. As a percentage of revenues, you actually see it's going down. So that's kind of nice that actually selling administration, it's actually gone down as a percentage of revenues. So you like to see that as well. Effective tax rate. I know Donald Trump's trying to pass his, by the time you read this or listen to this, might be passed already or who knows, but you see United States wants to lower its corporate tax rate to 20%. Well, look what Nike pays. 18% last year, 13% this year. So Nike's paying an effective tax rate that's below where the Trump administration is pointing to. So in that sense, it's going to be a positive. Lower corporate tax will be a positive for Nike because you see they paid 22% here. So it would have been 2%. Could have flowed 2% to their bottom line back here if it was 20%. But you'll see that, it's not going to hit Nike square at the bottom line, a lowering of the corporate tax rate, because they're already below that number. And in fact, if they take out loopholes and all this other stuff, this number might actually go up. But again, I'm not a tax expert, don't want to be one, but just really interesting to see this effective tax rate. You hear all about this corporate rate being at 30%. Well, look what Nike's paying. So net income, bottom line, again, we've seen these numbers, made $4.2 billion this year, $3.7 the year before, $3.2 billion the year before. You got to love that if you're a shareholder. And again, that's $2.51 a share, and they're paying 70 cents a dividend. So they've got plenty of coverage to not only pay the dividend, but reinvest. I love this page, revenue. This is awesome. And you love to see this on an annual report because with a company like Nike, you want to see how are the different sectors performing. So we see footwear up 6%, apparel up 6%, equipment down 5%. This has to do probably with golf, I'm assuming. They probably say it somewhere in the bottom here. I'm assuming this has to do with golf. They eliminated their golf, and so this is probably a little bit of this equipment sales. I'm sure soccer balls and basketballs and baseballs are still selling at a relatively same clip, but golf's been down, and they actually eliminated that. Global brand divisions. Notice this little 3 right here. It means you can come down here. Global brand division revenues are primarily attributed to Nike brand licensing business that are not a part of a geographic segment. And not little vague here, but I'm assuming Nike brand licensing. This either has to do with Nike licensing its brand in some cases, or licensing NBA team logos or something like that. Could be that. I'd have to. I'm sorry that I don't know this off the top of my head, but really the main point is when you see a number up here, it often gives you again, in this case, a little more color down here. You'd have to be a little more, really get into the finer details. This is something too. On investor relation page, do they have a contact here? I just want to see this really quick. Sometimes they have, investor contacts. So if you were totally confused, you searched Google and you couldn't find, what's this Nike brand licensing business? One thing you can always do is you can don't call Nike store or Nike headquarters or whatever. Ask a representative of this. They're not going to know it. You got to find the investor relations contact. Go ahead and give them a phone call. Here's an email address right here. You can shoot them off an email. Some companies better than others. I don't know about Nike. I've never tried to contact them myself, but that's something you can contact them for if you can't find the answer for this. Again, another way to find the answer is you could do a copy, a find, paste it up here. There's 4 matches to this. Okay. So we can go down and find, again, it's really just the same sentence again. Same sentence again. So, that's something if you really wanted to know this. Nike's case, not that big of a deal because what are we talking about up here? We're talking about $73 million. That's a lot of money, but this is a $32 billion company in sales. $73 billion in sales is not really moving the needle. But if this was moving the needle for you, or if this is a number that really changed or whatever, you could always call the investor relations and they it's their job to kind of give you fuller disclosure, more. And they're not going to tell you everything. They're not going to tell you what forward guidance, or hey, this is the shoes we're coming out with. But they'll tell you stuff like this, like, hey, can you explain? Just call them up, say, hey, on page on page 75 of your annual report, there's this global brand division. This is what it says. I want some more information about that. They'll be able to tell you, probably right there over the phone, if not have to get back to you on that. But I encourage you to do that if you want to. Nike showing you they break out their Converse division here. That's super cool. Love that. Sales to wholesale customers. So here's Nike in a nutshell right now. Notice the sales to wholesale customers. This is like Dick's Sporting Goods. This is all the retailers out there that sell Nike stuff. Okay, Finish Line, Foot Locker, etc. These are their wholesale customers, and you notice this number is not growing. Okay, or not growing. I mean, it's barely growing. Okay, year over year. Sales direct to the consumer. So this is Nike, Nike.com. This is their apps. Look at this number. Okay, so Nike is very quickly growing their direct to consumer. And if this number keeps growing, if this number can just stay flat and this number can grow, don't be shocked. Again, this is not financial advice, but if this number keeps growing like this number stays the same or stays right around there, this number stays like this, yes, you will see these shares retest this 65 level and eventually break out, because this kind of growth, direct to consumer, I'm sure the margins are better. Everything's better when you're direct to the consumer. Just ask Amazon or any of these companies that sell direct to consumer. So awesome. And you can see over here the change. We can see the change here. And this is like excluding currency changes, something I don't want to get into right this second, but it's showing you excluding currency changes. So it's saying, hey, if the currency, they sometimes say constant currency, if the currency didn't fluctuate and wasn't, if it was like the same all the time, this is how much we grew. But because currency rates change, exchange rates change, this is the real number. This is what we realized right here. So this number gives you a sense how fast it's literally growing. This gives you a sense on kind of brass tacks, kind of bottom line, hitting the financial document, how fast it's growing based on these currency changes. Okay, this is factoring in currency fluctuations, stuff Nike can't control. This is taking out stuff Nike can't control and showing you how the business is growing. Does the same thing here. We see that take out what Nike can't control, and actually look, currency fluctuation actually has a less of an impact. Probably on direct consumer, they can turn over that money. That money doesn't change hands as often, so they're affected less by currency. I don't know that for a fact, but it sure sounds good. Again, we see this was totally Nike Inc., Nike brand revenues. This is kind of like, looks like the whole company. The numbers actually look almost the same. And, neat. I love this. Men's, women's, young, so kids and other. So we're seeing what's this other. So again, we have a 6 right here. Let's go in here. Others include unisex product, equipment, and products not allocated to any of the other categories, as well as certain adjustments that are not allocated to, designated by gender or age. So this is like products that don't have kind of a general gender specific branding to it, and equipment for the most part. We see that category is actually growing. So I like to see that. And although it's down or it's like kind of flat from this year, so not growing as fast. But we're seeing these numbers are growing, and we like to see that. And again, this is right here is the excluding currency rates. So we see that change here. Another cool. So Nike actually breaks out. I remember when they didn't break out Jordan Brand, but I think what happened was, look at these revenues. $3 billion in revenue. I think at one time the Jordan Brand wasn't quite that big. Like this is like, look at this. Jordan Brand's like over 10% of their revenue here. So the SEC, I think Nike would prefer not to have to list this as its own they don't want you to maybe, for a while there, for longest time, you go back into older annual reports from Nike, they don't show you Jordan Brand. But at some point, this became a big enough number that I don't know this for a fact, okay, but what likely happened, because Nike doesn't want not necessarily you, but doesn't want Adidas or Under Armour. They don't want people to know that, hey, look, what if they pay Michael Jordan? They probably haven't paid Michael Jordan $3 billion over his whole career. Michael Jordan, I don't think is a billionaire. He might be a billionaire. But I don't think they've paid him $3 billion in cash. And look what they do in a whole year on Jordan Brand. Look at year after year. Jordan Brand's a massive brand. So Nike doesn't really want you to know, hey, you can sign an athlete, pay him. I'm sure Jordan's made close to $1 billion, if not $1 billion from Nike. But they're doing $3 billion in sales in a year. And this is like 20 years after Jordan retired. Like 15 years after he retired. It's amazing. So what ended up happening was the SEC likely sees this number or likely inquires about it and forces Nike to put this number on here. Showing you Nike basketball. So we actually see Nike basketball went down. So basketball sneakers, Paul George, Kyrie Irving shoes didn't sell as well. Football down. Sportswear down. Golf in the tank. What's working for Nike? Sportswear is working and Jordan Brand. So what you'd like to see is some improvements here. And running is actually working for Nike as well, which is almost the biggest category over sportswear in terms of overarching categories. So you'd like to see these numbers stay where they're at, and you'd like to see maybe some of these other categories turn positive. Certainly Tiger Woods coming back to the game of golf. I think he's actually doing it this week as we speak, kind of dating this video. But knock on wood, hopefully my boy Tiger Woods can come back to the game of golf. Moving on. Again, what we just walk through here in terms of visual numbers, they're going to walk through here in text. So might put you to sleep, but some of this stuff is here in text. Now it's showing you in futures orders. Again, they tell you futures orders. I think it's everything. It's external. Here's probably a key line. One, it's orders from external wholesale customers. So not Nike. Okay. So people like Dick's Sporting Goods, and internal orders from our direct to consumer inline stores and digital commerce operations, which are reflected in prices that are comparable. I see. So sometimes it looks like Nike orders stuff. It's probably maybe for their stores or whatever, but they occasionally, maybe it's like drop shipping too. I don't know if they do that, but it's internal orders from the direct. So a little bit of direct to consumer in here. I don't think this includes all of direct consumer, at least from what I understand from listening to prior Nike calls. It's showing you the change in these. So Nike, ooh man, but again, the direct to consumer business is growing. So it's kind of, this is why revenues grew and we didn't see a decline there. Gross margin. So we see the changes here. They're probably going to walk you through why, higher Nike brand cost. Okay. Higher off-price mix, which means stuff like at TJ Maxx or in the clearance aisle is usually called off-price in the fashion world. Higher Nike full price, ASP, average selling price, net of discounts. So they're going to walk you through this gross margin number here. So they're talking about gross margins. They're going to show them to you here, and then they're going to walk you through them here. So that's always pretty cool. Total selling and administration. Demand, what's this? Look at this. Demand creation expense. This is a Nike term here, so they have to put a little one right here. What is demand creation expense? Demand creation expense consists of advertising, promotion costs, including cost of endorsement contracts. So you might say, hey, they endorsed Michael Jordan and DeMarcus Cousins and Paul George and Ronaldo and Roger Federer. All these. And, where's all this money? Here it is, $3 billion. That's all. And I want to say, that's all. It's incredible that they have all these athletes, and these athletes generate so much attention on their social media page when they're actually playing the game, in the television, commercial, print advertising that they use with LeBron James and everything. Look at that, $3 billion. Of course, a company like Under Armour is worth about $5 billion right now. Nike spends $3.3 billion just on endorsements, television, and digital print advertising. So as we can see, this is actually roughly 10% of revenues. Remember, we had about a $34 billion run rate on 2017. We see Nike spends about 10% of that on television, digital, and print advertising. Now we see the operating overhead expense. I'm going to assume this, it's probably going to tell you down here, but I'm going to assume this is like the cost of creating these ads, the film crew, the television buy, maybe even the cost to buy the television spots, flying Ronaldo out to do the commercial, et cetera, et cetera. We see these have actually changed very little. Maybe for Nike to accelerate its revenues again, maybe they're going to have to bump these up a little bit. Me as a shareholder, I wouldn't mind seeing these numbers grow a little bit, because this is what we see percentage of revenues, 30%. Okay. This is what drives Nike right here. It's actually down year over year. So I'd like to see maybe this tick back up to this 32% range, and get back up, start, sign some more endorsement contracts. I mean, they let Steph Curry go for like a couple $100 million, and that pretty much turned Under Armour into a viable competitor, at least for a few years. Moving on, other income, such a small number, not going to worry about it. Effective tax rate, again, we went over that. Trying to lower it here in the States side, below 20%, but as we can see, Nike's already under that for the most part, most years. Break down North America, Western Europe. You're like, hey, this is a global company. How are they doing in North America? There it is. How are they doing in Western Europe? Look at that. I mean, Central and Eastern Europe. Greater China. I mean, you need like a geography degree to know where, the difference between these two. Japan, emerging markets, global brand division. Again, there's a 2. So it's showing you again this Nike licensing business. Okay, such a small number, we're not going to worry about it. But we're seeing, hey, positive growth in all these categories. And then we see, look at how much currency plays a factor here. Wow, look at the currency here. Look at this. Look, Japan grew 17%. A lot of it had to be based on currency gains. So there was a 7% currency difference, but 17% change. So excluding the currency changes, Nike would have only grown 7%. I say only. So you see in some cases, Nike actually benefits from currency changes. So that's why they pay their CFO huge amount of money, is to do stuff like that. Okay. And you can compare that over to other years, and they actually break out Converse here on its own as well. And you can see how Converse is growing. More breakdown of the markets. If you want to know, hey, how fast are they growing in China? Or for me, it's like, how much more room? China, we know, is huge. This is a huge market, biggest country in terms of population, and it's certainly their middle class. Everything is growing in China faster than pretty much anywhere in the world in terms of consumer growth, consumer consumption, consumer wealth, and all that is growing really fast in China. We actually see, hey, look, Western Europe is almost as big as China. That just shows you this China number. This is going to keep growing. I mean, there's no doubt. Obviously, China can do what they want, and then their country has been known to put the lid on things. But this is a number that's going to keep growing. This is a number that I can imagine one day, I don't know if we'd be doing a video on YouTube, but one day it's going to be bigger than this number. This China number is actually going to be bigger than that number. So that, if you're a long-term investor, if you believe in that, you better believe this number will keep going up. Again, anytime I give you advice on where a stock's going to go, it's 100% opinion, as is the majority of this video. Again, more footwear, apparel, equipment. They're kind of breaking it out here. They're giving you, again, sales direct to consumer, wholesale direct to consumer. You see these numbers growing. Then they explain it down here in kind of relatively plain English. Again, these are, again, this is North America. Sorry about that. This is North America. This is cool. So it's showing you North America, footwear, apparel, equipment, sales, wholesale customers, direct to consumer. So you can see what's going on in North America. Then you come down here. This is Western Europe. You can see what's going on in Western Europe in all these categories. How is it growing? What's happening? Look at direct to consumer in Western Europe. We love to see that. Central and Eastern Europe, okay? Again, direct to consumer. Look how small this number is. So hopefully this number will keep growing, and it is. China, okay? Here we go. Boom, look at this number, 26%. Love that. Okay, we're seeing everything grow, almost double digit, except for equipment and wholesale, but everything's growing double digits. We'd love to see that continue in China. Japan, again, seeing, these, the internet exists in Japan and China, but its penetration and e-commerce and all that, far less than the United States. So you can see these numbers will likely continue to grow. And it's awesome that Nike is able to reach its customers in Japan, reach its customers directly in China. That is a huge, massive, massive advantage it has over its competition. Because you can go look at this number. Not everybody breaks this number out. Nike breaks it out likely because they're very proud of how fast it's growing, but it also breaks it out to show you this is a huge competitive advantage that Nike has compared to other brands and other retailers out there. Emerging markets, it's going to be, again, if you're like, what is an emerging market? It's going to include Argentina, Uruguay, Chile, Korea, Mexico. And it actually shows you their growth rate independently down here. So if you're like, well, how fast are they growing in Argentina? Maybe it's Messi is really killing it there. How are they growing in Mexico with maybe NAFTA and all this other stuff that might be happening? So it shows you here, and again, it shows you here the direct-to-consumer scaling up nicely in those areas of the world as well. Definitely like to see that. Global brand divisions, such a small number. I wouldn't really worry about something like whenever you see, 73 million on a $30 billion company. It's not a huge deal. Converse, doesn't look like they broke that out region by region, but here you are, see revenues $2 billion. You see the earnings before taxes, and you see that it's growing at about the same pace as the rest of the company is. Corporate revenue consists of foreign exchange hedge gains. So you can see this is what this is how the CFO makes the big bucks. Is he keeps this number either in check or he makes the money in terms of currency hedging and all that other stuff. Being a global company, this is probably quite a large department and filled with very intelligent people, and they might not know nothing about Air Vapor Max and how Tiger Woods hits a golf ball, but they know all about Japan USD conversion ratios and all that other stuff, and they kind of explain it to you here in plain English. Again, foreign currency exposure and hedging practices, they'll break them down. If you're really into that, they'll break it down here in plain, relatively plain English. And notice how extensively they go over it. It's a big part of what Nike has to do because they have employees. Not only do they sell these sneakers and all this stuff in all these places, but they've got to pay all these employees in their local currency and all this other stuff. Man, it's quite a huge undertaking. Cash flow activity showing you, I don't know if we saw a statement of cash flows yet, but this might be before they show it to us, but it's showing you their liquidity. They've got liquidity meaning, kind of cash availability on hand, and they're showing you they've got 3.6 billion. Okay. This is 3,640 million, which is 3.6 billion. Off balance sheet, they don't really go into it much. I think these rules are changing, so we might see that kind of change in the future. Contractual obligations. Look at this. Endorsement contracts. I love this. So look at this. So they actually have a lot of endorsement contracts kind of going off the books. So it shows you that, hey, they've got some room here to bump this back, bump these future, sign the new rookie in the NBA, sign the next hot soccer player. You know what I mean? So it's showing you that they're not overly extended on these endorsement contracts. They've actually are going to trend downward. But again, Nike will sign the new basketball player. They'll sign the new hot whoever. Long-term debt showing you how that is being paid off over time. Operating leases, like buildings and all that other stuff. Capital, that might be capital leases. And all that other stuff. So they're showing you product purchases. So they're showing you they're not committed to buy any product in future years. So that they've really got their supply chain pretty tight if they're not buying it that far in advance. And again, if you're like, hey, what's this? What's this? What's this? They're going to explain it to you a little bit in plain English. And again, like I said, if you can't make sense of this and you do some digging, you can't make sense of it, go ahead and this is what these guys are paid to do. Give them a call, make them work for you, the investor. New accounting procedures. There's probably some new stuff in here. And so this is like, if you want to geek out as an accountant, there's some interesting stuff probably in here. I'm going to keep flowing through this. Again, more foreign currency exchange stuff. It's showing you kind of the risk levels that they have in terms of different. Looks like they've taken out some loan, or maybe they have some exposure to Japan here. And they're showing you, it looks like they have some debt in Japan or in yen. And so they're kind of showing you that here. Keep moving through this. Consolidated income. So again, we've seen these numbers. We've seen the revenue. We've seen the cost of sales. We got the gross profit number. Here it is all in one. Here's our demand creation. We know this is endorsements and other stuff and like TV ads and all this other stuff. We see the overhead associated with this right here. Okay, so all the employees, the TV cameramen, all that stuff, that goes here. Now we're getting down to our total number. We're going to start subtracting these numbers, get to a net income of 4.2 billion. Again, these numbers are in millions, so you have to add, 6 zeros here. So 4.2 billion over 3.7 last year and 3.2 the year before that. And again, we see, dividends per share. I'm always looking at this diluted number in most cases. And since these numbers are close enough, doesn't warrant me to really do any further investigation. But I encourage you, if you see these numbers really differ on a company, or like one's positive, one's negative, or they're really far apart, more than maybe like 30-40% apart. There's probably no hard number for it, but it's something you'd want to be aware of. This is comprehensive income. So this is all the income. So we have, this was the net income, but then we have translation, we got cash flow hedges, we got other stuff going on. This is the true, I wouldn't call it true bottom line, but we're getting as close to the bottom line as possible. We see this number differs from this number, but this gives you operational bottom line. This gives you like more of, again, like it says, comprehensive bottom line, which includes some of this other stuff that's related to the business, but not related to selling sneakers necessarily. Consolidated balance sheet. So finally we get an overview of the balance sheet. We see total assets here. We see, again, cash, and inventory level is always interesting on these balance sheets on these fashion companies. Always like to see how this inventory level is kind of scaling up or down. And then you get long-term debt. As we see, this has grown. So Nike has taken more debt out, and you get the total number of shares outstanding, and you get your total shareholder equity down here, which you always like to see moving up in the up direction. Net income. Now we're getting down to really like some this is cash flow. Yeah, this is our statements of cash flow right here. So we see here's our net income, and then we start taking out all this stuff. Some of this stuff is non-cash, like a stock-based compensation. Nike is giving shares of Nike, which it creates out of, I don't want to say creates out of thin air, but can just issue at any time. So this number is $215 million, but this isn't really millions of dollars. It's $215 million of shares of Nike, which the company awarded to definitely employees, but maybe even athletes probably get compensated a little bit with the shares of the stock as well. So, and you start moving through, you get here's how the cash flowed through the business. Again, cash flow is showing you how cash flows through the operation of the business. So you're seeing this cash provided by operations. This is a key number a lot of people look at. Is this is the cash just spit off by the business after we start taking out some of this stuff, and then we factor in investing activities, financing activities, including net proceeds from long-term debt issuance. This is a 1.4 billion. You're like, oh, this is good. Well, remember, this is issuance of debt. So Nike borrowed this amount of money. So you got to be careful on these cash flow statements, making sure you really identify what these numbers really mean. Okay. And so, you're always piecing together these sheets, and the cash flow is kind of part of that. More shareholders equity. So this is going to show you the issuance, and here's like the share buyback. It's showing you how many shares Nike actually bought back, which is probably the most interesting thing on this, because Nike is actually reducing their number of shares outstanding. We also expect certain options to be exercised by employees, things like that. And it's not growing at this really like excessive rate. At a company like Snapchat, or like some of these younger companies that are like really growing the number of shares outstanding, this kind of page would be more entertaining. But in this sense, for me, it's showing you the repurchase of the shares. It's showing you how Nike is executing on its buyback strategy. Now we're notes to the consolidated financial statements. It's going to go through everything that I went through it there in plain English. Demand creation. It's talking about how these are endorsements, how winning championships is key. Like, some of this stuff is actually kind of interesting. How they recognize revenue. Software development costs. I mean, Nike's a shoe company. They're developing software. Short-term investments. There's just all kinds of stuff here, and it's basically everything that we read above, but in relatively plain English. Okay, not all the time, but in somewhat English. Property, plant, and equipment with Nike, again, with so much that they have out there. They got $3.9 billion worth of plant and equipment. So we see buildings, machines. The thing I would look for in this, not necessarily in Nike's case, but maybe for other companies, are big changes. So if you see big changes here, it might be good. Might be good that they're investing in machinery, equipment, and internal use software. But it might not be good. It might show wasteful spending. I've seen companies where they built big, lavish offices and office corporate headquarters and stuff. And it's like the company's sales are going down, and they're spending millions of dollars on corporate headquarters. And so it's something to keep an eye on with Nike. They're relatively flat year over year. So nothing super crazy to be worried about. Accrued liabilities. Looks like liabilities that they've accrued or built up over the year. Nothing jumps out at me here. Again, you're looking for big changes here and then do further investigation. I don't see a ton there. Fair market measurables. This is showing you, so they have United States Treasuries, and they're showing you their value essentially based on a given time. Again, they're showing you as of May 31st. So that looks like maybe that's when I don't know when their financial calendar ticks over, but this is showing you as of May 31st, this is what this stuff was worth. And not particularly, not always that useful, but I remember in 2008, 2009, you were paying a lot more attention to this because things were fluctuating in price, and it wasn't always beneficial to companies. More derivative stuff, foreign exchange stuff. If you're really into that, want to geek out on it, it's in here. Short-term borrowings. It's showing you, look at this interest rate. Wish I could get this on my my credit cards. Here we go. Long-term debt. Probably one of the last things we'll cover here as we're kind of getting towards the end. When you get about halfway through these documents, you're almost getting to the end because the end tends to be a little bit of fluff. But look at this. So you're like, man, Nike's got $3.4 billion worth of debt. Last year they had only $1.9 billion. What's going on? Look at this. They're borrowing money at 2.2%, 2.3%. This is like less than an interest rate to buy a house. That means banks are loaning Nike money at lower rates than they will to a person buying a real asset. like a house. Unbelievable. I wish I could borrow money. Nike, even though it's not growing as fast as it once did or as fast as other fashion companies, I'm not going to blame the company for borrowing money at these rates. I mean, if I could borrow money at these rates to run some of my businesses, God, I'd be a billionaire too if I could borrow money at this rate, but I can't. Showing you the outstanding principal here, and it gives you a total here. This is in yen or whatever. Yeah, yen. Look, they borrowed 2.6%, 2%. Gosh. Wish I could borrow money. Income taxes. More income taxes showing you where they break out country to country. More tax stuff. Preferred stock, common stock, stock-based compensation. We're seeing that here. Actually, it's gone down. Again, this is not always bad. Sometimes it's bad, or it's not bad, but I mean, these are shares that are diluting you, but I want my executives and employees to feel rewarded. I want them also to feel tied to the company, and that's one way to do it. Dividend yield, they're showing you Nike's paying, this yield is based on the price of the shares ended May 31st. So there we get our answer. May 31st is really the end. I was probably wrong in saying the Q4 is the holiday season earlier. Earnings per share, benefits plans, showing you that they have 401k plans. Now we're getting, when you get down, I encourage you to read through all these documents, especially the smaller companies. They love to bury stuff down here in the bottoms. But typically with a Fortune, Nike's got to be like a Fortune 100 company or even higher than that. It's in the Dow Jones Industrial Average. So it's like one of the biggest companies in the world. When you get down to here, you're getting down to really nitty gritty cash flow hedges and fair value hedges and just really nitty gritty stuff down here. But typically what they'll do is they'll start kind of summarizing all the little charts that we saw earlier. They start stacking them on top of each other. So notice they start stacking all this stuff on top of each other down here. I noticed that in a lot of 10Ks. You get like bits and pieces of it above, and then they typically start stacking them down here and giving you really broad overviews down at the bottom. That's why it's always worth going through this. But again, we've gone through all these numbers. We've seen all these numbers. They're just showing you them again. And finally, we're getting down to really nitty gritty details. This is like footnotes. I don't know what some of this stuff, I don't even know what it is. Showing you PricewaterhouseCoopers signed off on that, whether that means anything. And then finally we get to the executives essentially signing these documents for liability purposes. And this is neat. We saw this, I think, in the Tesla. We see like this is all the kind of trademarks and kind of brand names that Nike owns, and so some of this stuff you're really familiar with. You might not know Twin Dragons is a Nike holding or trademark or whatever. Get down to the directors. So you see Tim Cook. There you go. You like to see that on a board of directors. And let's see if we recognize anybody else here. Got a guy from FedEx, so logistics. That's cool. Probably need somebody like that. General Electric, big global company. Obviously, Mark Parker. You've got Chief Operating Officer for IBM on here. And TV executive, it looks like. Among other things. We got the logos. And again, we're getting down to kind of the brass tacks, and that's it. And they printed this on responsible paper. So thanks, Nike. Folks, that's it. Thanks for tuning in. Another investor channel. This review came from a suggestion. So leave me a comment down below. Hit that subscribe button if you want me to go through a particular company's annual report. Just send me, best thing to do is leave a comment on one of the videos. I do try to read and respond to all the comments on these videos. check me out anytime. Leave me a suggestion, any kind of thing that you want me to walk through, and I'll be sure to do this. But thank you so much for watching this video. Hope you learned something, and hopefully it helps you on your investor journey. Thanks again.